Hi guys, welcome back to Finpact. I want to talk to you about how uncertainty is rising because the Federal Reserve is going to announce whether they have an aggressive interest rate hike or not. Now, why do you guys need to know about this? Well, it literally impacts the crypto and the stock markets. We've seen that crypto is very correlated with the stock markets and global macroeconomic factors. I mean, cryptocurrency markets, because they are decentralized, they essentially run with free markets. Whereas when there's government intervention, it's more of a Keynesian economic sort of theory. Now, this is why interest rate announcements are incredibly important if you invest in crypto or in stocks. Now, the Federal Reserve started their 2-day policy meeting today. Now, we will find out whether they will increase the interest rates because they've had interest rate hikes all year because of the inflation. We are in times where inflation has been sky high. I think it's a 40-year high if I'm not mistaken. Now, here's the problem. The Federal Reserve do want to raise interest rates, but there's been a financial crisis in the US. There were 2 banking failures. And if we take a look at this article on the Financial Times, they've said the US bank system is more fragile than you think. Now, the reason I mentioned the banking system is that the Federal Reserve also want to protect the banking system. At the end of the day, inflation is a detriment to consumers, but so is a collapse in the financial systems, especially after the 2008 financial crisis that took place in the US where all the banks collapsed. Well, maybe not all, but the major ones like Lehman Brothers. In this article, they mention an abstract from 5 researchers at the University of Southern California, Northwestern University, Columbia University, Stanford University, and NBER. So they've said, we analyzed US banks' asset exposure to a recent rise in the interest rates with implications for financial stability. And since you guys know, the Fed is aggressively increasing interest rates, so this will impact the US banking system. So they said the US banking system's market value of assets is $2 trillion lower than suggested by their book value of assets accounting for loan portfolios held to maturity. It said that mark-to-market bank assets have declined by an average of 10% across all the banks, with the bottom 5th percentile experiencing a decline of 20%. So it's safe to say that the more the interest rates are getting hiked by the Federal Reserve, the more fragility that will be seen in the US banking market. In fact, I can't remember exactly which country changed their stock listing, or was it something they had listed in dollars to another currency. Anyway, guys, banks are really scared. So if they say the interest rates are going to go up by 25 basis points, which is what people are expecting, we may see a lot of market volatility. If they go higher than that, then we may see huge crashes, especially if people have predicted 25 basis points. So in this meeting that the Fed is having, they are going to be discussing the fragility of the banking system, and accordingly, they will decide how aggressive they're going to make an interest rate hike. Experts are predicting around 25 basis points, but we have to wait and see. I think they will have a lot of pressure from other policymakers and experts saying that you need to consider the banking system because the US cannot currently afford a recession. I mean, we just had the recession after the pandemic and a lot of US debt is piling up, so a recession would be the worst thing for the US to pay back their debts. So right now, I would say if you are not willing to trade upon this news, then stay away from the stock and crypto markets until you have a concrete answer from the Fed and you see how the markets react. If the markets drop drastically, then you know that these are dips that you can buy your favorite long-term stocks and cryptos for the future. So guys, I hope this market update video helped. I think it's incredibly important that I do more of these because although the crypto and stock markets are based on fundamentals, the markets always play a factor. But again, if you are investing in the long term with a 5 to 10 year horizon, then you have less risk because usually this market volatility smooths out over time. But if you are trading in the short term, it is very risky. Anyway, guys, remember, I'm not a financial advisor. These are just my own opinions based on my experiences. So consult a financial advisor. I am not one, and make sure you do your own research. And if you did enjoy this video, hit that like button and that subscribe button and that bell notification. And I will see you in the next video. Bye.